I'm going to show you now how to drastically improve your trading entry models, regardless of the type of strategy you use. And I think the reason why a lot of traders fails is because they don't understand the concepts I'm about to show you guys. So it's actually pretty straightforward, even though not many gurus or educators talks about it. When it comes about entries, you have only two circumstances that can happen to you, right? So you have a dynamic type of entry and you have a static type of entry. What do you mean by dynamic and static? Dynamic is when you go, for example, to YouTube, you learn a concept, right? So let's say fair value gap, let's say order block, whatever it can be. And you basically, based on this theory and the concept that you study, you try to identify where exactly price creates them within your entry criteria and you take the trade according to that. While static is basically every time your entry happens, you don't look at any of that, but you have a very mechanical approach to take a systematic point all the time. And what I mean by all the time is that psychologically, the pressure is lower compared to all the time refining these zones. So I'm going to show you now shortly. So let's start with the dynamic one. Dynamic, so say that we're talking about fair value gap. So as you guys can see, say that this price takes out liquidity to the left. Okay. Now, what happened after that is that a lot of people, if you guys studied ICT or any other concept, regardless, you probably know what is fair value gap or imbalance or order block. And sometimes that fair value gap or the order block, whatever, in a smaller time frame, when you wait for lower time frame confirmation, it can actually happen from here, can happen from here, or can happen from here. Now, what happens is that each time a perfect setup happens like this, you tend to have, I don't know, one time an entry like this, one time an entry like this, one time an entry like this, right? And this is what I call dynamic, because that fair value gap can sometimes appear over here, or maybe in the middle, or maybe over here. And what happens is that based on the position where you see your fair value gap, your risk to reward can also change. Because now, for example, if I take a trade from here and I want to make a 1 to 2 risk to reward, right? Look at this. That's why it's my 1 to 2, correct? Now, say the fair value gap happens over here. Look at this. That's a 1 to 4. So now my 1 to 2 is over here. So if I go to the extreme, that's now my 1 to 2 happens over here. So what I'm trying to explain over here is that the biggest issue is not about the risk to reward, is your psychology. Because tell me, how many times you have refined an extreme POY like this, and then you see, for example, price almost coming near to your entry, like something like this, or something like this, and then it goes away. Tell me, how did you feel at that time? Just think about it, how that made you feel. So next time when you mark up a POY, right, point of interest, and then you see price coming closer, you impulsively jump on the trade. Why you do that? Because now you feel like, oh, if I don't do that like this, am I gonna miss out the trade? And that's exactly the biggest problem trading with dynamic approach. Because when you use the dynamic approach, what happens is that you continuously, based on the setup, so in this case, if you use this pattern over here, head and shoulder, break your structure, whatever you want to call it, right, you actually end up continuously having this situation over and over again. And over again, you end up in a spiral of emotional fight with yourself where you start doubting, shall I do this, shall I do this, shall I do this? Because what if I miss out, right? What I miss out, right? And that's the real danger of dynamic approach. While static approach, on the other hand, is quite simple, okay? You don't, so you get to a lower time frame and you don't have to refine and find all these POY. You have specific criteria, right, that you use. So this is one main concept I actually teach inside my community in the mentorship. And then you continuously take that, okay? Well, it's not about extreme, it's not about here, it's about finding the specific POY in the middle on a range or in a specific zone where you say, okay, you know what, that is what I'm doing, okay? Now, to give an example, some people, they use the rule of the 5 pips. What do you mean by 5 pips? Or maybe 10 pips, depending on obviously the range and the time frame. But for example, if you say to yourself, okay, I'm gonna take every time I get set up or entry like this, that is what I'm doing. 5 pips rule. So I know that is fixed. Okay, so let's say in this case, let's do 20 pips. Okay, so that's a 20 pips. I do 20 pips. That is static. So no matter what happened over here, that's how I'm taking the trade. Okay, I mark up the most extreme zone. I calculate like 20 pips and I leave it like this. That's it. So what's happening over here? This is one of the model. This is not what I teach in the community. I teach them something way more logical, rational. But for the example purposes, I make you understand what happens in here. So if you set up a specific mechanical rule to yourself like this, so you make it static. So you say that I'm getting 20 pips. At that point, no matter what happens in the market, right, whether the price comes here, here, and here, you will be calm. You won't be like dynamic where you see fair value gap everywhere. You don't know which fair value gap to take. Maybe you refine it too much. Maybe you're feared of missing out. That price could potentially get away from this or this instead of coming to your entry. So then what happens is that when you do static, where the rules is mechanical, is fixed, right? In this case, the 20 pips, then you know that no matter what happens, you just wait. You just wait for this rule to play out. Because obviously, when you set that specific rule and it's static, it's because you already backtested thousands of times. So the system that I teach in my mentorship to my students, right? I have personally backtested that specific entry model that is static over 15 years of data, right? And I realized that that is the most logical approach for me to do to make the system flow all the time without having major psychological impact. And then the reason why you guys are keep failing, and I'm telling you this because I've seen so many times happening, is that so many people, because of social medias and because everything they're learning from all these gurus, they always fall under this category. Because trading is meant to be simple, not complex, not crazy. Okay, a lot of gurus, they tend to tell you so many theories. They give you thousands of entry models. Guys, if you come to learn from me, I'll show you only 2 entry models. That's it, not 2. So it's just one actually, but I say 2 because sometimes it can vary. But at the end of the day, it's just one model. You do one model, one system, one approach. Everything is static, everything is mechanical, and you're good to go. Now, I'm not saying that you have to come to me. Absolutely not, because that's not the purpose of the video. What I'm trying to do here is teach you the importance of the dynamic and static entries. That is absolutely important. So regardless of where you're starting or what you're starting, try to create an entry model that is simply mechanical and repetitive, where you don't have to jump in a smaller time frame, right? Let me remove this, to find out fair value gap here, fair value gap. No, you find one POY, right, which has specific static rule, fixed rule, right? And you take that continuously over and over and over again. And I can promise to you that after 200-300 trades doing this exercise, guys, your psychology around entries will disappear for good. Okay, there is more to it. There's more to it. I'll make more videos about it to help you even further with your psychology and emotion, because obviously this is just one bit of it. But I'm giving it to you because I promise if you start backtesting this, if you start applying this on your chart, you will see massive improvement on your entry models. If you guys want to know more, you can book a one-to-one session with me. The link is in the description somewhere in the bio, and I will help you to map out exactly your entry criteria, your entry model, your top-down analysis, the way you need to do it according to your strategy. But for the time being, before you get any one-to-one whatsoever, I want you to focus on what I just said in this video. Just think about it. How many times you studied something, you applied, and you felt psychologically very, very turbulent, right? Because your POY, your refinement area, zone, whatever, was emotionally triggering you. Just think about it. And then start seeing things the way I just told you. Find something mechanical that you can apply on your entry model to make things easier. And you do that consistently in a repetitive mode. Do this for next 200, 300 trades, and then come back over here and tell me how did you feel about it. This being said, guys, I'll see you to the next video. If you have anything particular that you want me to cover, comment down here below, and I promise I'll make the best video out there only for you.